Hello traders, Cory Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of February 24th. I am back from a golf holiday, so these will be updated on the weekend as usual. Had a week off there in the middle of the month, or a week and a bit. So let's get to it. Each week going through the same process. If you're ever wondering where this article is, because it does get updated each week, you can go to TradeThatSwing.com under Stocks, Stock Market Analysis and Trades, and that's where you'll see it. And yeah, each week just going through the same process. Some watch lists. I did update the best swing trading stocks for February. That's just high momentum stock names. And they also got some other lists that are here, just strong performing stocks over the longer term. If you're looking more at these weekly outlooks for when to potentially consider buying some of those longer term names, basically when health indicators turn poor and when they turn positive again, that can be a time to step into some of those names you might have been eyeing for a while that are solid companies, maybe had a bit of a dip, and that's an indication of when we can start buying them again. How the market indices are doing, let's check them out. So we can see the NASDAQ and S&P both had this little channel. They were in uptrends. NASDAQ stalled out right near its prior high, but it was kind of this same, kind of little rising channel recently. The S&P a little bit different. It's more of a range recently, so it broke above this. So I'm kind of eyeing this range, seeing how it acts at the bottom of that range. Do we bounce? Do we fall through it? Ultimately, you want uptrends moving in blocks higher, right? Basically holding above where it broke out before. So this is the area it broke out before. So far it has held above it. Same with the NASDAQ, broke out. It's holding above it as of right now. NYSE composite, somewhat similar, but didn't quite reach its prior high, and it's kind of got the same thing the S&P has going on right now, ranging environment the last few weeks, and we're going to see how does it react near the bottom of this range. Do we get the bounce, or do we start breaking down out of it? So a bit of a wait and see time. As we're going to see from the health indicators, they're not good either. So no urgency on jumping into positions. And if we're looking for ideal conditions, it's when all of these are moving strongly to the upside. We can see the Russell 2000 pretty weak and selling off again, kind of a rounded top type pattern going on there at the moment, and never even close to its prior highs. So definitely weaker there. S&P, same thing as the S&P composite, the TSX index for Canada, same as the S&P 500. Moved up to its prior highs, and we're getting some ranging movement. Bitcoin stuck in this range, basically in a no trade zone for me at the moment. As you can see, I've kind of boxed some of this off. So we have the big range, then we had this smaller box. It broke out. We have moved back into that lower box. Some of you have taken my day trading course. We look at things like this. I call it my range rules, where kind of like what I talked about before, we want boxes and ranges and price action moving up. If we move back into prior boxes, that's not really ideal. You can see we had this boxy area here where we had a range, and we've broken back below it. So at the moment, we're kind of in the bearish portion of this range, and then now you could basically box this off, what we've been moving in recently the last month or so, and we'd want to see a pop above it and then hold above for a move back toward the highs and potentially a long-term breakout again, but that'll ultimately depend on whether we can keep moving up these boxes. As I say in most of these videos each week, this is not about prediction, day trading, swing trading. I'm not really into predicting. It's just, what's the market doing? Is it confirming a thesis? Is it not confirming a thesis? That helps me decide how I'm going to trade. Gold, really strong recently. So we'd had this, choppy period in here where I talked about not trading. This was before my holiday. And we had just started to move up. And at this point, we've continued to move up. So gold looking really good. Well above its November high, or October-November high. The gold miners did not reach it, so it's lagging a little bit, right? The stocks are weaker than gold. If you're trading gold futures or whatever, hey, you can just trade gold. If you're trading the gold stocks, you know, they have been strong recently. Like we have had this reversal to the upside in the sense we had lower swing lows here, and we've shifted that. So that's a good thing. It's a little weaker than gold, not making it quite as ideal, but still, this would be, you know, potentially a sector where we might be seeing some trades and some trade setups because it has been stronger recently. Market health indicators, these tell us what's going on underneath the hood. As you can see, I've just drawn in the kind of range that we've been in recently, still holding above this prior range that we were in. But in terms of, what's going on underneath the hood. So this first one, volume not important to me at the moment. That's more for after we've had a correction. I want to see some volume picking up when we start to move up. So nothing going on right there. But this is the rate of change. It's just an ROC indicator, rate of change, and it's percentage terms. And what I'm looking for here is just uptrends are characterized by lower volatility periods like this, right? Where you're just kind of drifting up, market's kind of complacent. And in a way, that's a good thing, because while that's happening, until we start getting to see those bigger drops, that's what tells us to back off. So uptrends characterized by lower volatility, downtrending periods characterized by higher volatility like this. And you can see we've been a little bit higher volatility even through this chop. We had the election, all that sort of stuff. So it's been a little bit choppier period, but we haven't seen those 2% down days, and 2% down days are kind of my cutoff. If I see one of those, a 2% down day in a single day on the S&P 500 is usually a pretty good warning sign to step aside for a bit. You're not going to end up missing much. The last one was in December, and we had this big sell-off here. We did get a little bit of a bounce, but you can see prices ultimately didn't really recover. So there's usually at least a couple days. This was, a big down day. And, even if we waited for a few days over here, we didn't miss out on much of a move, and then we got the follow-through day, which is another thing we watch for after a decline. And, we had, a week or two of nice upside movement. So we haven't had one of those 2% downside days, but Friday, what was that? The 21st, February 21st, pretty big down day, not quite 2%, but getting close. So that's still okay, but we are seeing a little bit of heightened volatility. Advanced decline line, this is advancing stocks minus declining stocks, is a cumulative number. It's not really telling us much at the moment. You can see basically the S&P made a high here, so did the advanced decline line. We drifted off, and the advanced decline line came back up to the prior high and is ranging. The S&P 500 came back to its prior high and is ranging. So it's not really telling us much. It's just neutral. When this is really useful is when we get a divergence where maybe the S&P 500, let's say, looks a little bit weak, but this indicator is moving to new highs. Then that tells us, hey, underneath the market is lots of stocks are advancing. So even though the price action on the chart might say otherwise, underneath the fundamentals are good. Why? And that kind of is the reason we look at all of these, is because indices are weighted in certain ways. The S&P 500 is heavily weighted toward the very biggest companies in the US, even though it includes 500 companies. The top handful basically sway the market considerably. So you might have a few stocks that are doing well or doing really poorly, the rest might be doing really well or really poorly, and the chart's going to mostly show what's going on in those top handful of stocks. But if we were looking at kind of a broader scope of stocks, we would see much different price action. We might see a lot of stocks going up, even though the S&P 500 kind of looks like it's, not acting very well or stagnated. And this is why we'll discuss it in a minute. I always say, look at your own watch list, your own trade list as well as this, because hey, if you're finding lots of trades that are working, even if the S&P's maybe not great or the health indicators aren't quite great, ultimately is what we're doing making us money? Great. Those are the conditions we want to be trading in. Once we start to see that stop working, and especially if the health indicators aren't favorable, that's our time to back off. This is up volume divided by total volume. It's neutral as well. We're looking for extreme ratings. This upper black line or this lower black line, you can see we've been in the middle for a long time. For this indicator to be of any use, I find it needs to be these extreme readings show us something. And yeah, we haven't had any for a while, so that one's neutral. This is percentage of stocks above their 50-day moving average. The red is the S&P 500. The turquoise bluish one is all US stocks. And so 52% of S&P 500 stocks are above their 50-day. 42% of all US stocks are above their 50-day moving average. It's generally going to be much easier to make money when most stocks are above their 50-day moving average. Pretty much everything's moving up. Even if I don't recommend buying random stocks, but even if you did, you have a better chance of making money during those periods. And if you're picking strong, good stocks with quality setups, it's going to be much easier to make money in an environment like this, where pretty much everything's just moving up, as opposed to environments like this, where you have fewer stocks moving up and it's been pretty flat for a while. And again, this does not mean every stock is flat. It just means the wind is at our sails in periods like this and like this, whereas it's going to be a little bit tougher to make money when we're seeing things like this, just because fewer stocks are moving up and above their 50-day. Nothing magical about a 50-day moving average, just a crude measure of stocks in an uptrend. The ultimate indicator is how many quality setups there are and how your own trades are working for you. Look at your own trades. I like to use them as a feedback mechanism. If you're doing really well, hey, keep going. As long as conditions stay the same as what has been favorable for those stocks. Sectors on the move, nothing really. If we look at all of these, nothing's performing really great over all three time frames. And even over the last 3 months and months, the ones that are doing okay are the consumer staples and utilities. I stay up here. These are ones that I may end up in a trade every once in a while if one's performing really well, but as a general rule, I'm not going to be too heavily involved in utilities or consumer staples just because they're slower moving stocks. We're not going to get those big moves. But if that's kind of all you have available and you are seeing some nice setups in those stocks, they're viable options to be trading in those sectors. But yeah, generally I'd say 95% of my trades are going to be in these sectors that tend to move more. So what am I doing right now? For the mainly just enjoying the volatility by day trading. There's lots of stocks out there that are moving a ton intraday, 10%, 20%. That's almost like a swing trade. So it's what you might expect to make from a swing trade in a week or so. So I'm enjoying that. Swing trades are possible, but until conditions improve, I'm looking at swing trades as pretty short term. As we can see, the market health indicators are a little bit mediocre. The price action at this point is not green light. It's a little bit more like some caution is warranted. So few longs right now on the swing trades. And if I do take something, it would probably be on a tight leash, preferring to hold for as few days as possible right now, just because we have had these kind of like Friday where you can you know, it might be moving along okay, but then all of a sudden you have a big down day. And that seems to be the market we're in at the moment. So yeah, so that's what I'm doing right now. What I like about day trading is you can do it every day. There's, you know, always something on the move. Swing trading, these periods of inaction, and there's, you know, been a fair bit of inaction lately, simply because market conditions have not been ideal. So that's your weekly market outlook for the week of February 24th. Happy trading.